Good morning, everyone. I'm Gaurav from InCred Equities. Nifty continued to witness pressure and 24,900 was breached, like a hot knife goes to the butter. And though it was not on the expected lines, there are a couple of positives also here. So if you look at the hourly charts, because once the reversals happen, they will happen on a lower time frame, and more and more confirmations will be seen in the higher time frames. So if you go by that principle, then on hourly charts, there's a clear case of or a clear indication of triple positive divergence in RSI, meaning that Nifty made three swing lows, but so far RSI has been making three higher lows, and that's a rare pattern. And generally, such things have resulted in bottom out formation happening on a short term basis. So, we may see a sharp bounce sort of coming in. 23 on the RSI hourly charts is going to be a key level to watch out for. These are spot basis. RSI going below this would dismantle the pattern that we talked about. But if that is not the case, we can see bounce back coming in either today or tomorrow, and that can be a very strong towards 500, 600 points upside. So safe traders, as I said earlier, 25,000 is a key level to watch out for. A lot of writing happening in the call side, but risk takers can see that if Nifty is sustaining about 23, 24 RSI, they can buy, keep a stop loss based on RSI rather than the spot prices. A difficult thing to gauge, but nevertheless, this can be a very fruitful trade. Same is the case with Sensex, where it has also seen triple divergence in RSI, positive divergence in RSI. That's a good part. If you see broader market indices, we have seen reversals happening. I spoke about this in the weekly report earlier as well, and on multiple times on the morning calls as well. That the broader markets have seen reversals from the immediate positions, and we may see some profit booking. It has gone as expected. However, small cap index, another very interesting pattern developing on the charts. If you go to the hourly charts, RSI is trading around 11, 11 and a half. And historically, in the last 6 to 9 months, whenever RSI has gone in the range of 10 to 15, that has resulted in a bounce of at least 5%. So, in my opinion, maybe 1%, 1.5% more downside is possible in small cap index, and then we can see a very sharp rise. That may also not happen. We may see recovery right away, but it's difficult to gauge exactly from where it may see a sharp bounce back. So the worst scenario is going to be 1.5% from here. So things are looking good. US markets as such has been going very strong. They have been making lifetime highs throughout, whether you talk about S&P 500, whether you talk about Nasdaq or the broader market indices like Russell 2000 or 3000. So all of the structures are positive. If you look at European markets, they have also been doing well. Ironically, India, which has been in the very good position and outperforming index, that has taken a backseat, and we are one of the worst performers in a very immediate basis. So, in my opinion, if US markets remain strong, looking at RSI on benchmark indices and broader market indices, we are right for a bounce. Maybe uh, the current month might not give that much of cheer, but August onwards, we may see a very strong upside sort of coming in. For today, as I said earlier, that one should focus on index. Nifty risk takers can buy as long as RSI trades about 23, 24 levels and play for 500 points upside. If one does not have access to chart or finds it difficult, the safe trader should buy Nifty once it sustains about 25,000 spot, keeping stop loss of 150 points, playing for 25,300, 400 levels. That will from my side. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.